Hello and welcome to Real Estate and the Adventures of Parenthood with Cindy Presgraves, and we got Anisha Perez today.
Hey.
Hey, how you doing?
Good.
You're welcome. So today we're going to be talking about the options in this market. A lot of people are thinking that this is 2008, that interest rates are skyrocketing, which is true. But at the same time do you really have to pay that 7 or 8% with the interest rate in this market? Let's talk about what type of options you guys have. And do you guys have options? Anisha, what is really going on in this market and what's happening?
So essentially, the simplest way I can put it is inflation is happening, and it's getting a little bit out of control. So to combat that, the Federal Reserve is raising rates to make, and then when they raise rates, they mean like bank to bank, borrowing of money. That's the rates they affect, but that trickles down to everything else, because where do businesses and everybody gets their money is from banks. So it normally, when the Fed rates go up, the mortgage rates aren't affected the same. But in this case, because we are in an impending recession, then we are seeing an effect, but it's across the board. And that's really what's affecting the housing market. It's not the houses themselves. It's just the market as a whole. So that's the background of it.
So I understand, so the whole Fed reserves and inflation's going on, and people are like, oh no, you know what? I'm just waiting for the market to crash. And that's one of the reasons that have buyers held and sellers that the sellers that are selling is because they have to, because there's moving, there's different things going on, divorces, babies, and all that. But do they really have to go with that market's interest rate?
No, we have this great program. It's called the Temporary Seller Buy Down of 1%. So that means that the seller, normally sellers can give concessions, and there's limits to how much the seller can help a buyer, towards their closing costs and everything. But in this specific program, the seller can give to the buyer a sort of escrow account to pay for the buyer to buy down their rate for 2 years. So the first year, the rate would be 2 percentage points lower than the market rate. So if it's 7, then it'd be around 5%. And then the second year, it would be only 1 percentage point lower than the market. So then it would go up to 6% at that point. At the third year, the year 3 to 30, that's where you would know what your payments would be at that 7% that you would originally have gotten with any other bank. But that really gives the borrowers 2 full years to wait for rates to get better and refinance. And the good thing about that is that when recessions happen, rates come down. So we're just kind of waiting for that to happen eventually. But when that happens, that's why I'm telling all my buyers to take advantage of it now. Take advantage of this program, because when that happens, once rates do come down, then at that point there's going to be a whole bunch of buyers, and we know how that went in 2020 when rates were super low.
I completely understand, and believe me, you know what? I've been an agent for almost 5 years now, and it's just back in 2018, you were seeing there was an impact there, but it was not that great. Versus now, it's just wow, you know what? It's crazy. Let's go ahead and we need to buy. But why are buyers have you seen a lot of buyers that they just cease and stop? You know what? I'm not going to do this. I don't want to buy right now just because I feel like the market is going to crash.
Yeah, I'm getting a mix. There's some buyers that are still, I got to buy. It doesn't matter. I'll refinance later. Like those are great. They're gonna have a huge growth in equity. And then I have other buyers that are, I can't. We want to wait until things calm down. So it just depends.
I would say like there's a cost of waiting for mortgage rates to go down. I mean, if you see there's an article on KMC, Keeping Current Matters, that they say, you know what, the cost of waiting for mortgage rates to go down is, mortgage rates have increased significantly in the recent weeks. I mean, if you see the difference between January and now, I mean, it's been a major change completely.
Yeah, that's the thing. Home values are going to continue to increase. So the same house now, if you were, let's say you're like, okay, well, 2 years of a higher interest rate, that's nothing compared to what you're going to have to pay a year from now for that same house. Like just the difference in what you're coming out of pocket. Will sellers be okay with giving as many concessions as now? Those kind of situations where, right now sellers may be more opt to giving seller concessions, but will they in 6 months? Will they in a year? So that out-of-pocket cost really is a big deal, because as recession and inflation continues, that money in your pocket is going to be worth less and less.
So here I'm actually reading, there's an article I'm going to actually talk about here, the impact of rising mortgage rates, which is like, as mortgage rates rise, they impact your purchasing power by rising the cost of buying a home and limiting how much you can comfortably afford. And this is how they explain it. I mean, completely. I mean, right now, and this is what I said at the beginning of the year, interest rates are going to be in the 8 or 9 by the end of the year. And right now we just became in October. And in October, we're looking at a 7%, even 7.5%. Anisha, you're a lender. What are you seeing as interest rates?
The national averages are around 7%. If you Google it, that's the national average. So, I could go up to 8-9% by the end of the year. But the Fed's not seeing that inflation is going to go down. They're saying that inflation is going to go down by maybe 2 to 3% by January, because they're going to be so aggressive with rising rates. And what a lot of buyers don't think about is that when that's impending, that rise in rates and that increase, that's also going to affect renters. That rent is going to go up, and it can go up at any time. It doesn't have to wait till a lease renews, correct?
Well, yes, they do have to wait till a lease renews completely. Let's say, for instance, if you're in a month-to-month, then you're kind of screwed. But then again, think about this, and I'll actually do a TikTok video on this. Like, how much interest rate are you paying with your rent? That's a great question.
100%.
Think about it. 100%, right?
Or more.
But then you're talking about, the interest rate that you're paying for a house. But there's a difference between having a house, owning a house, and just throwing your money away, which is basically renting. Yes, you do need to live in a place, but my question is, are you being wise with that money? Are you being wise with that? Are you building wealth for your future?
Right. I have a lot of other options right now to homeowners is home equity lines of credit, because they did decide to buy that house. So right now, let's say one of the spouses is unemployed and they don't have that whole household income anymore. The spouse that is employed can take that line of credit out for their house to pay off that car loan with a high interest rate, or those credit cards that are piling up. So that house is not just a house. Or if you rent a place, it's just a rental. You can't even put, stuff up on the wall, or else you're going to lose your deposit. But if you own your house, you have the option of, hey, this equity can do something for me.
That is completely correct too. So I'm looking here, going back to the, medium sales price or, affordability on houses. I mean, yes, but if you're trying to shop at a price point and keep your monthly payments between around $2,500 and $2,600 or below, I mean, your purchasing power has completely decreased, especially if you're looking at a $800,000, $900,000 home, and now with a 7.5% at a $450,000 house, you're looking at over $3,000 a month. But in this case, I would say there are options, and you're going to be like, okay, what are you talking about? You're crazy. Okay, there's also the buy down program, but now if you go into building houses, builders are actually having more lenders, and same time they're buying, like right now. So the community that I live in is Chafin Builders, and they told me this morning, they're like, Cindy, we have $10 million to buy down rates. And they're bringing down the rate to 4.25%, which is they want to sell you a home. They want you to have a home. Yeah. And right now, it's in some of these prices, you can actually negotiate with builders. It depends on how savvy your agent is as well. What can you negotiate and what can be done?
But that's the thing. You work with builders. You know the ins and outs of how and when to do that. So that's where, I mean, how would they even know that that's an option if they don't talk to you, you know?
But then again, it's about not even talking to me. It's about finding the right agent that is willing to work with you and knowing and having that, how to say this? Like, it's about not going to say, hey, you know, I don't need an agent. An agent is free to you, if you put it this way. Right now, there's a lot of incentives out there. Right now, like the program that you have, Anisha, is the buy down program. I mean, and what other programs have you guys come up with to help buyers and sellers in this case?
What we're looking forward to, and there's been talking about it. They've been talking about the 40-year mortgage instead of the 30-year. I know there are banks that are doing those. So that's also a thing that could possibly become more popular, but that's not mainstream yet. But that's the only way I see, you know, with the home prices continuing to increase. That's the only way I see people being able to afford, you know, average everyday person going for $300,000 if rates stay where they are, you know, because something has to change.
So now my question is, what about so we're in the state of Georgia, for those of you who are listening. Now my question is, and I know Anisha's in different states as well. She's licensed. My question would be is, what type of other programs do you guys have, like, you know, first time home buyers program, or is like here in Georgia, we have the Georgia Dreams, like.
Oh yeah. Yeah, we have, obviously the first time home buyer programs. We also have down payment assistance. Those are becoming more and more popular because of the sellers being more likely to pay towards closing costs. Because some of those programs, though they help with the down payment, they charge extra fees on the back end. So for the seller to pay for those fees, it really helps more buyers being able to afford homes. So those are becoming popular as well.
And that's good then. I mean, I would say, we still have the VA loan. We have the USDA. I mean, there's the conventional loans too. There's different type of loans and all that. Besides the first time home buyers and all that, what would you say is the best loan? And I know it depends on the situation and circumstance of each person.
Yeah. The one that I would suggest right now, if someone can work remotely, I would say USDA. Only because home values have increased so rapidly, then appraisal values are coming in, you know, where for a while it was where appraisal values weren't really meeting what people were willing to pay. And so now there's enough appraisals out there where the home values are kind of matching to what's expected. And with USDA, if they're willing to live out, you know, away from the city and they work remotely, you can actually, if the value is there, you can roll in closing costs into the mortgage according to the value of the home. So you can actually borrow more to pay for closing costs. So that's another good option.
Okay. So, I mean, it would be coming down to talking to an agent and talking to a lender that is knowledgeable and saying, okay, what are your options? Where do you want to be? What do you want? What are you looking for? And what is your end goal? Is it being a homeowner or just being a home renter?
Yeah. Yeah. I think, can't remember who said it, but I mean, people talk about creating college funds for their kids, when in reality, buying that investment property it would be the biggest investment for a child, way above a college fund.
Oh yeah, definitely. I totally agree with that because I mean, that's passive income. By the time they're 18, they're almost done paying the house. And I mean, it's just like, it's a great investment. It's going to be way cheaper than what it is today.
Even
or tomorrow.
Living in a dorm is expensive too, so that's what we hope to do here soon as well for our kids, just so that, because we can now, will we be able to later on? We don't know. Yeah.
I agree with that. Just building that passive income for your child.
Mm-hmm. So what are you seeing on the, on the new construction thing? I didn't know about that as far as like paying down points. What else
so it's crazy. I mean, the incentives that new construction are offering. I mean, I had buy down. It was like a 3.875 or something. I would actually have to look at it. I mean, there's a lot of builders out there that are actually offering like, okay, what do you want? What do you need? And they're actually, I mean, the buyer agents are getting paid more now, meaning that, hey, you know what? You got the 5% for buyers agents out there now versus when it was like during the whole, hey, 25 offers, we need a house. They were trying to cut commission. They were trying to eliminate those buyer agents. So now it's just like, okay, so now can we actually build a relationship with that? Okay, let's even negotiate the price of the house. I can negotiate this. What can we do for you? Hey, there's a cup of coffee. Do you need some wine? I will bring you some wine for you. So this is how builders are acting with us now. I'm a buyer's agent. I'm a listing agent. So I'm a little bit of both. But I build a good relationship with everybody. But at the same time, it's just like, people, if you're going to buy a house, don't buy it by yourself. Don't go with an agent. See what the best deal it is for you. And don't just be satisfied as, hey, you know what? I'm just going to go ahead and do this 7% because there's options out there. Don't go with a first agent. Do your homework. See what options, like I said, see what options you have out there. See if that's the best benefit. If not, then, sorry, Anisha, but, new construction. But then again, what can you get in new construction? Who can you talk to? Are you going in blindsided and saying, oh, here, because if you go by yourself, let's say for instance, if you go by yourself, they're going to go ahead and say, here, fill out the application. That's it. They'll send you to a lender, but do you have the power to negotiate? Of course not. Yeah, you can negotiate and all that, but the question is, are they going to take you serious and are they going to even negotiate with you? Like if I go in there, they'll be like, okay, it's Cindy. Let's see what it can be like. Okay, so what are you going to do for me? Okay. So, it will be easier because I've already built a relationship with them.
Yeah. Yeah. And at that price point, that's where the new constructions are, and then that opens doors for people in that price point. And that's amazing. I didn't know about that. But then people that are in a lower price point that really could benefit from that 2-1 buy down, because there's two types of buying down. There's regular paying down of a rate that doesn't do as much change as a seller buy down would. So.
And that's important because then when you're looking at resales, because now you're seeing houses that are under 200,000 that you are not even looking or seeing up in, it's been a while.
Yeah.
So
They wouldn't even make it for very long online. Yeah.
Yeah, I'd be like, hey, you know what? Wait, is there a house there? Wait, what? Oh, wait. Oh, it's gone. No, yeah. I thought I saw a ghost, but yeah, it's not there. But that's the thing. And it's just like now today, it's just like, now what do I do? Now how can I get that client? Because remember those clients that were in the 300, 400, 500,000 now are down to the 250,000, the 300,000 or below that, even the 200,000. So because the rate has gone up so much, but then again, there's always different ways. There's loopholes. I always say there's always loopholes for different situations and scenarios is how much money do you have? Can we negotiate that with a seller? And how desperate is that seller to sell?
Yeah.
So Anisha, is there anything else that you want to say or talk about?
No, I mean, it really is an individual, situation basis. So if anyone's like on the fence and listening to this, like it really is, it doesn't cost and it doesn't hurt anybody to just talk and see where you're at and where you need to be. Even if you were pre-approved last year, it could look 100% different right now. And you really want to know where you're at now. If you're on the fence, like I would say, take advantage of the situation now. It's a little bit trickier, but it really is still a win-win for those that can qualify.
And I completely agree with that. So, I mean, if you guys have any questions or anything, Anisha, I'm going to put your information on below. Anisha, where can they actually contact you if they don't look at the information on the podcast information?
So we're a husband-wife team. So you can go to samteamloans.com or you can call or text us at 404-962-0032.
Thank you. And this is Cindy Presgraves with Cindy's Realty Group. Oh, wait. Sorry, this is my podcast. Oh, my gosh. So this is Real Estate and the Adventures of Parenthood. So today I was talking a little bit about, but if you guys need me, I mean, you guys can go to my website, cindysrealtygroup.com, or reach out to me at 678-650-1425. 678-650-1425. And I hope you guys have a wonderful day.
Bye.
Bye.